Okay, so the basis of the strategy is you need to understand Btmm. If you're not using Btmm, just make sure that you understand the sessions at least in your session times, especially the Asian, because this is the basis of this particular setup. So on this particular day, you see that price came below, it was below the 50, so we're obviously looking for sells. TDI was trading below the 50. So as price pushes back up, this was possibly the first reaction I would have seen. But remember now, if you're also using Btmm, you need your price to come back and close below the 13, which is your safe entry. Any entry before that is an early entry, right? So it can be invalid. So if you enter early, you can exit. Okay, all right. I'll update when I'm taking trades on synthetics. I'll update. It's probably after this Zoom session, so I will update. No problem. I'll send the signals on the WhatsApp group. All right. So like I was saying, if you are selling, you need your price to close below the 13. For example, here, this was actually a valid sell here. Coming off this RR now, this was a rejection of this level. So my stop loss would have been here, but if you check, price came just for that particular stop loss, and they then turned and pushed back and closed back below all moving averages. So now this would depend. If you have like a loss or two losses, maybe you could call this a day and you will no longer be on the charts. But if you are on this particular trade, you might have taken this as a buy, because now your price is trading above the 50. So if that's a buy, your stop loss goes below the previous zone. Where you see price turning, that's your stop loss. So if you had entered a buy there, then that would have taken you out on both ways. This way for a sell, this way for a buy, both would have hit stop loss. But then if you're familiar also with TDI, now you see one leg outside the bands, one leg inside the bands, and this is a shark fin. So this would have told you that this push back down was actually a valid sell, but probably this was a news event. So on fundamentals, usually, personally, I don't trade. Others trade, but I don't. So this one, if it's fundamentals, then I wouldn't have taken the trade. So let's see what happened on the following day. Okay, on the following day, we had a nice little setup there. Okay, so when we wake up, okay, so remember also there's confluences to this. I'm just looking at M15. So probably there will be confluences showing you that this is actually a buy from a higher time frame. That is from your daily, your H4, maybe H1. So those are the first things you need to look at before you then zone into M15 to do this killer setup. So if you know that you're in a buy or in a bullish momentum area, you're looking for buys. So when you woke up here, price was trading above the 50, TDI above the 50. So you're obviously looking for buys. No reaction came off here. The only reaction which came on the center of the Asian range. So you could have looked to buy somewhere there. But then if you check, probably there was a news event again, because if you check, there was huge spike to the top and the bottom side. So probably if this had not taken you out with this spike on the bottom, you could have still been in and went on to take profit. But let's say your stop loss was tight and you decided to enter somewhere there or somewhere there, this candle would have taken you out. But remember, if a setup is valid, if it takes you out, probably you're losing, let me just check, it's less than 5 pips, I think. Less than 5 pips. So it's better to have a -5 pip stop loss hit. Then you can still come back in this trade, right? And take all these pips now. So this -5, you end up maybe in +30, +40, +50, just depending with how much the price moves. So if your trade takes you out, don't be quick to move away from your screen, because usually the dealer likes to trap, because this was very evident. most people, I believe they were selling here because this was a rejection, right? Most people sold there and check what happened. Price came, hit stops, 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 stops until here all stops were hit. Price came back, played around the same area. Then from there, it just went up. So if you enter a trade and the dealer takes you out, or if you see a funny move, just be patient because price will still move in your way. And if you're still on the charts, you can still take the trade. Okay, on the next day, same thing. You wake up, your price is bearish. TDI confirms you are a seller. So during London session, you're looking for a reaction either off the lows of the Asian session or the mid-range or the highs of the Asian session. So here on this particular setup, we got a reaction of the center of the Asian range. Nice candlestick pattern right on the 50-day, and the price fell. So you could have sold there and stop loss there, sell here, another sell there if you want. This another clean price action. So this particular pattern and this particular pattern, they are almost the same. If you see this pattern rejecting either on an order block, rejecting on a moving average or on a zone, that pattern will be valid for a sell. So it's usually like a green candle and a red candle. So we usually name this the railroad tracks, those who follow Btmm, RR candlestick pattern. So if this is green and this is red, it means there's a higher probability you're going to sell. So if you see that pattern, usually the price just falls. Then if it's vice versa, then the price pushes up. I'll try to show you examples where there is buy setup. So this was a valid sell here. So you can actually count through the days, like the trades which you are saying you could have taken, which ones are ending in losses, which ones are being profitable, how much would you have lost, how much would you have won. So those are some of the things you can check when you do your back testing. Okay, next day we wake up, price is trading above the 50. So we have a buying momentum or a buying bias. TDI is trading above the 50 as well. And here it had given us like a nice W here. So obviously we were looking for buys. So price breaks out the Asian range, comes back for the retest. So when your price is coming back for a retest, you're waiting for it to retest on the highs of the Asian, on the lows of the Asian, or in the middle of the Asian range. The only thing you'll be waiting for here is candlesticks. Right, so you need to know your candlestick, your price action, basically, like what your candles mean, what the different types of candles mean. So if they happen at a point of interest, then you should actually take those candles into consideration. So we're looking for a reversal here. The reversal didn't hold. The first reversal we got, however, was this one. So probably I would have entered a buy here because I saw this little W off the Asian lows, right, which is this yellow line. So I would have taken that buy there. My stop loss would obviously been here. So if you check, price came down, they hit the stops, then they rejected now off the 800 EMA, which was also close, very close to the Asian low, right? So I could have looked to re-enter probably here, which was the safe entry. Then my stop loss would have gone here or possibly under the last green candle. It was big, so I would have put my stop loss there. But otherwise, you should put your stop loss just below the previous low where you see your price 10. Okay, so probably on this one, I would have recovered my loss if I had taken this. Right. Confirmation of TDI coming back above the 50 to signify the buys. So if you also have seen this as a sell somehow, you would have taken your sell here, stop loss here. You would have gone into profit a bit, but if you check, then price then came back up. So if your stop loss was not at break even, the price would have hit your stop loss. Right. So remember, you win some, you lose some. Each strategy which we try to teach you, each strategy out there, there's also losses. The only thing is your losses, you have to be smaller than your wins. Your wins have to be bigger. Okay, you come into the next day, Asian range, you break out, looking for a retest. So possibly here you might have been looking for a sell, because what you see, the price action painted as sell there. Nice rejection of the middle of the Asian range, stop loss. Right, so this price, if you were paying attention now to these lows, it couldn't break those lows there. As much as TDI was showing, confirming the sell here, it became invalidated as soon as the price came back above the 50. So this price would have hit your SL, and if you were not back into this trade on a buy, then you would have missed this one huge 15-minute candle, which would have taken you straight probably to profit. Let me just see how big that move was. Okay, that was like a 40 pip candle, like in 15 minutes, 40 pips. So if you was not back in to the trade, possibly you would have missed. Okay, the next day we're looking for buys. Price broke out. We didn't get a retest here. The retest only came during New York session of the Asian highs here. Entry, stop loss. Price then went into the next day. We don't usually hold trades overnight. So this one would have hit stop loss on the next day. But then also on the next day, you could have seen that we're actually getting bullish. Remember that candlestick pattern here? So if you were still in this trade from the previous day, if it had not hit your stop loss, then you would have just closed manually and entered a sell for this particular day. Yeah, I don't know if there's any questions to this particular strategy. This is Btmm. It's a Btmm based strategy, and it's based trading off the highs of the Asian range, the lows of the Asian range, and the middle of the Asian range. That's the particular strategy we're talking about today. So basically what you look for is your price to come out of the Asian range, then come back for a retest. If it leaves and come back for a retest here, you take the trade. If it leaves the Asian range, comes back for a retest here, you take the trade. If it also leaves the range, comes back here, rejects, you can also take the trade. So this is for sell setups. Then for buy setups, it's just opposite. Prices to leave the Asian, come back, retest here, or retest here. Basically, that's it. So this is a day trading strategy. You need to use your confluences, your higher time frames, which we are not explaining on today's session. You need to use your order blocks, which we are not explaining on today's session. So those in the premium group are the ones who mainly benefit from this one, because that's why we explain everything. But I thought today I decided to just let this info out so that you can make use of it, especially for those using Btmm. So if you check, remember we say a buy, you're looking for price to come out, then come back and reject, right? Those will be your buy entries. So you can go down to as low as your M5, M1, maybe to get your sniper entry somewhere in there, but it's not something which you are touching on today, right? If you're looking for your sell, prices to break out of the Asian range, come back for a retest. You see this one happen on the middle of the range during the London-New York crossover. And not all trades will play out. You will have losses, but make sure the losses are small. Right, same thing here. Breakout, come back. This one, however, didn't reach the middle of the range. But then if you're using your order blocks, right, if you're using order blocks, you would know that, okay, man, this is actually the trade. Let me get in. Right, so your other info, which I'm just mentioning in passing now, those are the things we talk about in, usually we talk about it in the DMR sessions when we are having the live trading sessions, and we talk about it in the premium group. Okay, so basically that's it. I think I'll switch to synthetics now. Okay, we didn't get much of a break here, but this is the type of candle we need to see. for us to take a sell. So as long as it's London session, you know you get some volatility either during London or during NY session. Okay, is there any questions based on this? If there's no questions, I'm going to switch to synthetics. But to synthetics, I'm going to have to change the zoom because I want to use my other chart, which I've been marking on the other PC. So I'm just going to end, probably end this session. It's been recorded, so I'll send it in the Telegram group. Then I'll start on the synthetics just now. So this will be a live trading session now. Those on synthetics. As soon as I end this session, you can join in on the same link again, as it will take you now to my synthetics chart. So thank you guys for joining. This is usually what we talk about in the premium group, I guess. So this was just one particular strategy which I decided to share. So you can be profitable with it. If you're using MT4, I can send you this, the template. It's just a template which you install. You just drag it onto your chart and you can save it into a name, just like, for example, HB Capital. Then whichever chart you open, you just load that template. So if there's no questions, I'm just going to end this now. Then I'll open on the, just now on the other chart on synthetics.